What is up? It's Wednesday, March 26th. Zach Howard here. Here's your 3-minute market update. Sorry for the delay, the day getting this out. But let's look at some screens or visuals here. First up, volatility. Key in my process every day, as you know, if you've been listening to what I've been talking about. Interesting chart here. A lot happening on this chart, so probably you want to hit pause or look at it a few different times. But what we got here is the 1 month realized volatility, that green line of the S&P 500, and then that S&P 500 options expiration open interest. Last week, Friday, we had a massive $2.8 trillion in nominal S&P options expiry. And historically, looking back on this chart over the last 2 years, every time we have this options expiry, the realized volatility in the S&P 500 falls right off. You can see there on the left-hand side of the chart, north of 21 currently, and then it pulls right back. And what happens when the volatility comes out of the market like that? There's volatility control funds that immediately then deploy funds back on the long side of the market. They get more aggressive buying S&P 500 calls. Currently, we have this still negative gamma regime where there is volatility continued to be embedded thereof, where that 1 month realized volatility is higher than the 3 month realized volatility. So not giving the all clear, as I've talked about before. The VIX is the reading on the S&P 500 of the volatility reading as we see day to day, and it's still in this chopping around area of 17 to 20. We had to have some indication if it's going to fall below 17 and get another risk on theme. But until that happens, we are kind of still in this uncertainty land where it comes to the higher beta plays, if you ask me. Another chart here where the overall long-short ratio, as this is falling, the ratio is falling, there's more bearishness into the market based on fundamental market driven hedge funds and how they position. So the first time in a long time that the fundamental side of the market has been this bearish from a long-short ratio standpoint. Why are you not paying attention to gold yet? It has a nice round number, $3,000 an ounce. But more importantly, gold continues to flow back to the Western world. Gold is continuously flowing to the Eastern world, China, India, Middle East all the time for decades. But this is a new phenomenon, as we've seen in this price increase, seen here in this chart, flows back into New York from London, from the Swiss refineries here in February month, off the charts. What are you waiting for if you're not paying attention to gold yet? Look at this chart. All-time highs, higher lows, higher highs into a bullish all-time high price. This is one of the most beautiful charts you can see if you want to be long a trade. Of the 30 different trades I track daily in my notebook, whether that's yields, currencies, commodities, individual stocks from the mega cap stocks, FX, gold continues to be the most easiest to track and read to get long and buy pullbacks in this massive bullish trend, especially since January 10th. We've been up and off to the races here. You look at a long-term pattern, the cup and handle, we're right up and to the right here in breakout lane, and there's lots of green space ahead. But also what I like about gold here is its volatility. Its volatility resembles more of a currency or a treasury bond than it does a commodity or a stock, or even like a Bitcoin, which I talked about, has 4 times, 5 times as much volatility embedded here of. So you can get longer in your portfolio and having more exposure to lower volatility assets to really bring down the risk overall. Gold's volatility is falling into an all-time highs in prices, whereas other price action, usually volatility accelerates with higher prices. That's what I got for you today. I hope you enjoyed that. We'll see you tomorrow.